Hello friends, I am Gurudath Shenoy. So, continuing from the previous session, today as I will discuss on types of investment and types of investors. So, types of investments, as we know there are three types of investments, okay, long term, medium term and short term. Long term investment is any investment which you make for a time period of about 10 years. Okay. So, for example, real estate investment, gold investment and then investment made in national savings certificate, all these are long term where we cannot reap the benefits immediately. Even investment made in insurance policies is also for a period of about 10 years, where after the maturity of the policy only investor can get the benefits of insurance policies. So, that is called as long term investment. Second type of investment is medium term, where the period of investment is around 6 to 10 years. So, the purpose of the medium term investment is now again to meet the commitments in the forthcoming days. So, for example, after 5 years, if any person wants a particular money in your house, so at that time you can break open your investment, see that that commitment is met. Or suppose if you have got a dream of building a house after 7 years. So, in such case your investment can also become a part of arrangement of the funds for your commitment. So, in such case normally you go for medium term investments. Third one is short term investment. Short term investment is any investment which you make for a period of less than 5 years. Okay. The objective behind short term investment is normally the meeting immediate liquidity or meeting immediate commitments. So, there what you do is normally suppose if you are planning normally to buy a car, or if you are planning to buy a vehicle for yourself, or if you are planning to buy normally anything for yourself, any asset. So, in such case normally you need not be dependent on someone, or you need not borrow from someone. So, you can arrange it with your own means by normally investing in this particular investments. So, their investment remains helpful to you. Now, types of investors. So, types of investors can be classified into two types. One is from the financial markets point of view, and second one is from the business point of view. From the financial markets point of view, we have got three types of investors. The first one among them is called as conservative investors. So, conservative investors are those who are conservative in nature. Conservative means normally those people who care for their savings, who protect their principal amount, and then those who hate to take the risks. These people do not want to take the risks. Why? Because they want their hard earned money or hard earned funds to be remain same. To remain safe. So, in such case these people will never risk this by investing in risky markets. So, in such case they prefer to have an investment which is suitable to them as well as which meets their requirements, which provides them liquidity whenever they need. So, preferably these investors invest in Government of India bonds, treasury bills, postal RDs, postal FDs, post office savings bank account, bank accounts where normally we prefer normal savings bank account, short term RDs where guaranteed rate of return is applicable, where there is normally certainty in returns. So, in such case this is what is that they prefer to. Second type is normally the moderate investors. Moderate investors are normally just like 50-50. They want to take 50% risk and 50% they want to again care for their investments. So, in such case these are partial risk takers. So, when they are partial risk takers, ultimately they care more for what one side they prefer to have their fund safe. On the other side, they aim for growth of their funds or growth of their money. So, in such case, again, they prefer partial risk taking. Preferably, these investors invest in your equity linked saving schemes, ELSS scheme, or they invest in the medium term mutual funds, where we come across systematic investment plans. And they also invest partially in in the case of derivative markets, partially in terms of their gold and silver, like that. So, this is the quality of the moderate investors who moderately wants to take risks. Then third one is aggressive investors. Aggressive investors are those who want high risk as well as high returns. They want their money to be doubled, tripled, quadrupled in a shorter period of time, or sometimes even if period is long, does not matter, they want the equal returns on their investments. They want their fund growth as fast as possible. So, that is what is the objective of aggressive investors. Being an aggressive investors, normally they are ready to risk to any extent. That is why they prefer to have investment done in normally share markets, commodities market, gold and other costly commodities market. They also prefer normally trading in futures and options. Likewise it is. These are the qualities of aggressive investors. Aggressive investors are risk takers, risk seekers. That is what it is now. So, from the second classification we look at normally from the business point of view. From the business point of view, we have got three types of investors: short term, medium term and long term. Short term investors are like just like your partners of the business. So, these investors care for their returns as well as normally they want their share in the profit from time to time. So, these people normally can see whether your business functions well, whether it is making profit, whether it is growing over a period of time, whether your debt, so the debts as well as capital ratio, whether it is intact or not. So, this is what is checked by normally your short term investors in the business. Second one is normally medium term investors. These medium term investors normally can see they are normally investing in from the period of 1 to 5 years generally, and these investors in the business normally can they care for growth of the business as well as growth of their funds both. They want normally see an enterprise to grow along with their funds. They want enterprise to be recognized, enterprise to grow, develop and become larger in its size. That is what is normally their intention. So, in such case normally moderate investors normally can they generally to take more risk than your short term investors. Medium term investors also takes more risk than short term investors. Third type category of investors from business point of view is long term investors. Long term investors are generally those who invest for more than 5 years, above 5 years in the business. So, one thing is sure that normally these investors normally know that business will continue. It is a going concern, it will continue, and moreover normally they have full trust on the business. They have firm faith on the business. That is why normally they invest in the above 5 years, and they are assured that normally they are going to get back their returns. They are also assured that they will get their returns more than their expectation, and business will make a place in the market, so that normally their capital will increase. It will multiply more than the required number of times that is there. So, in such case normally these are normally called as long term investors. The basic objective of long term investors is they are ready to invest any amount of capital, but what they expect is double returns. For example, we have got venture capitalists. Venture capitalists invest normally see the more amount normally see, but normally they expect proportionate returns. The returns which even your bank will not give, the returns which normally even share markets does not give, or gold price will not appreciate, commodity markets will not appreciate, and other markets will also not appreciate. So, what they expect is normally see they want more than double the returns within a reasonable period of time. So, money should multiply, along with that normally they should also get the name, fame and reputation back. That is what they look out for as far as normally business is concerned. Okay. Now, to conclude, what I can say is normally see from the investors can be classified on two things. One is from financial market point of view, second one is from business point of view. From financial markets point of view, we have come across conservative investors, moderate investors as well as aggressive investors. From business point of view, we come across short term investors, medium term investors and long term investors. So, the basic focus of these investors are, one thing is normally again we have the investors who are more conservative in nature, caring for their savings, and then we have the investors normally who are dare to take risk seekers, who want normally see the fund to be appreciated maybe in 2 times, 3 times, 4 times or perhaps more than that within a reasonable period of time. So, this is what is normally see the type of investors we come across. Thank you very much.